Hello everybody. Let's go over the moving average and how you can apply it to your charts as a proper indicator. So all the moving average pretty much is, to keep it very simple, it's a statistical calculation used to analyze data over a specified time period. So let's look at our moving averages down here at the bottom. They're going to be underneath everything, and you're going to see indicators labeled right here. I can click on MA. That's going to be our abbreviations for moving average right here. So I'm going to click on that. You can see that we have different numbers in parentheses here. We have 20, we have 50, we have 150, and we have 200. These numbers are what is referred to as our specified time periods. So for example, let's go ahead and keep it simple at the MA20. So the moving average 20, it's really going to depend on what chart you're on as well. So right now I'm currently on a daily chart, as you can see in the left-hand corner. Okay, so this line right here, the current price is 576, 575, right around here, as you can see on the right-hand side of my cursor, 575.71. All that price is, it's the average price of SPY, which is our ticker symbol we're currently working on, the average price over the last 20 candlesticks, okay? So I think the 20th candlestick is somewhere around here. So it's going to be the average price of just these candlesticks over here, okay? Just these ones, because it's the 20-day moving average, essentially. The average price over the past 20 candlesticks. In this instance, each candlestick represents 1 day. So technically, it's going to be the average price over the past 20 days. Let's say if I were going to go to an hourly chart, click on hourly, you're going to see that the moving average is priced a little bit differently. It's going to look a little bit different, all right? It's going to look different on every time frame because again, if it says MA20, if that's what I'm currently on, MA20, then it's the average price of the past 20 candlesticks, right? So you can look at this chart and say, okay, this moving average is currently priced right here, where this blue line is, okay? And you'll be able to see that it's currently priced right around 580. That's the average price of the past 20 candlesticks on this hourly chart. So probably just like, around like these candles right here, the past 20. It's going to be this subset of data, and this is the average price of that subset of data. So it's a great indicator. It's a great tool. The way you can use it is it can help you ride trends. It can help you identify trends. For example, when you look at this hourly chart, if you look at this uptrend on the left-hand side, you can see that we are consistently above the moving average majority of the time. Okay, and being able to identify that can help you saying, hey, you know what, I'm going to put on the bullish trade, or maybe down here, I'm going to put on the bearish trade because this is going to help me ride the trend. I'm going to go back to the daily chart here. Look at this section of data right here. Right, if you notice, we consistently ride the 20-day moving average. So the moving averages are also going to act as a support and a resistance. So when the price comes back down to it, then that's a great opportunity to potentially get into your trade, right? It's a signal, and you can continue to ride the trend. For example, if we retest the moving average down here, then that can help you to get into a bullish trade to continue riding the trend. Understand that it is the average price, right? And it's what a lot of other investors and traders are looking at. So if you're trying to buy into a stock, if you're trying to find an entry point, it can help you with that as well, right? Because the entry points, a lot of other people are also looking at some of these moving averages, and they're telling themselves, if I want to get into a stock when it's uptrending, what is the best price for me to buy the stock at? The average price, right? It's the moving average. It's the average price. Instead of buying at a more inflated price or buying at a higher price, they'd rather buy things at the average price. It's never going to be perfect. It's never going to be a perfect indicator. The market's capable of doing a ton of crazy things, but they can help you out quite a bit. You can look at moving average 50. You can add multiple of them. You can add the 150, the 200. So the 150 and the 200, these moving averages right here, it's going to be this one and this one. These identify longer term momentum. Those are going to be the average over the past 200 candlesticks and the average of the past 150 candlesticks. The moving average 50 right here is going to be the average over the past 50 candlesticks. Okay, so it's a more medium to long term momentum that it identifies. So great tool to have. It's it's wonderful when all the moving averages are moving in the constant same direction, because that identifies momentum on the short term and the longer term scale. So hopefully you found this helpful. It's a great indicator to use. Try it out for yourself, and hopefully it can help you identify some good entry and some good exit points in your trading. Thanks for watching.